What's going on, guys? This is Foresight Capital, and today I wanted to drop in and do a quick video update on NIO because I think they're coming back to a point where it may make sense to enter some more trades on NIO. I followed NIO for a couple of weeks and we had some very profitable trades where we were buying and selling in the 30s, but I stopped buying NIO because at the $58 per share mark, or even really at current valuations, I think that the price is just way too high for the level of sales that NIO has. However, we've got a very strong technical setup here, so I wanted to talk about that and the good risk to reward ratios that you can get for putting on a trade in NIO if you have a little bit of capital that you're looking to earn a nice return on. All that I ask is that if this video brings you value, consider subscribing and give the video a thumbs up because we do deep dives on stocks like this all the time and it really helps the channel reach more people. So on Friday afternoon, NIO actually closed at $41.98 per share, and then in aftermarket hours faded just a bit to $41.54. We're actually sitting right at a long-term support line, which I've got notated here by this blue line, and that is about $41.50 per share. We've used this recently as support and as far back as November 16th. So the support and resistance lines in NIO are very interesting because if we pull up the actual 1-year chart here, we can see that they've traded as low as $2.11 and as high as about $58 per share. So there aren't very many long-term support lines, so to speak, because realistically we're not staying in any price point for any long period of time. However, it seems that the 50s is where we're going to see some consolidation because we saw a big run up and then some trading around in the 40s and 50s. But we can see this blue line here acted as daily support for multiple occasions, and we're reaching that level again, which means it's a good potential for a trade setup. So I've actually got a box over here of all of the support and resistance lines that I'm referring to. So if you hear me referring to a color, you can look off to the left and see what sort of corresponding price is with that colored line. And I've extended these lines all the way across the screen. So if it looks like they're running through some candles, that may not be the actual support or resistance line that we're looking at. It may be off to the left or the right-hand side of the graph. So now that we've kind of talked through all of that, again, we saw the price decline from about $58 per share all the way down to $38.43 before having a little bit of a rally and pullback, But this is actually a very strong technical setup because if we look here, we can see that the low of this candle where it opened is about $40.85. We had a bit of a rally in the price and then a pullback, and the open of this candle was $41.23. We had a little bit of a rally and now we're sitting on long-term support. So we can see that each time the stock falls, we're setting a marginally higher low, and that seems to be a strong technical indicator for this stock that potentially we could see an increase in the price. Now we've got a very good technical setup here because there's a really strong risk to reward ratio associated with the stock. And I'm going to talk about two main support levels, and I've got them notated here with the green line and the red line. So we'll talk first about the green line, and this is if you're really looking to protect your capital, you're really disinterested in trading NIO, and at this point I would almost recommend not buying NIO if you're going to take profit or take losses at this level. But if you really need to protect capital but are interested in NIO, this is a good place to actually set a stop loss. You've got basically $1 of risk to the downside. You can set a stop loss here, and we've used this price point, the green line of about $40.56 per share, multiple times at the bottom of candles all throughout this trend. So it could be a very tight stop loss for you. Where would be a more realistic stop loss if you're looking to take your losses and kind of move on with this particular trade would be about the $38 to $38.43 per share range. Now there isn't anything on this particular chart because we're only going back 20 days in price action to indicate that, but if we open up the 1-year chart, we can see that it was used multiple times as support right around the $45 per share range where we had some pullbacks on multiple days, and it was actually used as resistance back at the beginning of November. So I'm going to head back into the 20-day 1-hour chart here and say that that's realistically about a $3 per share downside. So now that we've tackled the downside, we can talk about where the stock could potentially go. So we're sitting on support, meaning that realistically we could probably see a curl up in price action. I'd want to see a solid green candle before I would ultimately be buying around this $41.50 per share range. And once we see that, realistically, the next level of resistance is going to be this orange line at right around $50 per share. That means that you're setting yourself up with about $8 by the time you factor in the fact that we're going to need to see a green candle here above this support line in order to enter the trade. So we'll probably be buying closer to $42 per share and targeting about $50 per share. So an $8 per share potential there, which is very solid returns, almost 20% to the upside. And this orange line was really used as support multiple times throughout the trend, starting back here at the beginning or the middle of November around the 13th. It was used as support again around the 23rd, support on some candles again around December 1st, and we haven't really seen those levels since then as the stock has been selling off. By the way, this sell-off was largely caused by bad news within the industry that the U.S. government and the stock exchanges would like to see these Chinese companies, not just EV companies because it also extended to stocks like Alibaba, basically comply with certain regulations. And if they're not able to comply with those regulations within a specific time frame, I believe it's 3 years, then they risk the potential to be delisted. And so investors became a little wary that potentially once they start complying with these guidelines, things may or may not be as they seem with the companies. But I would argue anyway that if we take a look at the analyze chart here, we've got a $58 billion market cap on NIO currently, and they sold about $660 million worth of cars last quarter. So one could argue that the stock price and the market cap are really not very well correlated with the risk that's associated with the level of sales and the level of profit that these companies are going to see anyway. So I'm not sure that the sell-off was entirely warranted because it is entirely possible that these stocks turn around and do end up complying and everything is exactly as it seems before that sort of time frame is up. So again, going back to the risk to reward ratio here, remember you had about $3 of downside risk. You've got about $8 of upside potential for well over a 2-to-1 risk to reward ratio, which is a trade I very often will take. And in fact, I try to target around a 1.5 to 2 risk to reward ratio. And that's really just to the next level of resistance. You've then got the opportunity to kind of run up to this next level of resistance at about $54, which we can see was pretty strong all throughout the end of November here, where we just kind of had a bit of trouble breaking above that 54.10. It was also used back in the middle of November. So that's the next kind of price target that you would be looking for. But just again, want to see a big green candle here around this support. And if we see that, I'm personally going to be entering into a small position and possibly scaling up once we break above this yellow line, which I wouldn't consider strong resistance. But again, if we're able to kind of push above this yellow line, I think the real next struggle is going to be that $50 per share range. And at that point, you've got a 15 to 20% profit that you can go ahead and take on this stock. So always do your own research. Never risk money that you're not comfortable risking just because some guy mentions on the internet where he's going to be buying and selling. But that's just kind of my thoughts. I wanted to make a follow-up video because I was covering NIO pretty heavily and then just stopped as I thought that the market cap was a bit out of line with where it realistically should be. And now that we've got a good bit of discount worked into the stock from all-time highs, I think it's prime for a potential to enter the stock again. So let me know down in the comments, will you be trading NIO over the next couple of days, or did you ever sell to begin with? Thanks for stopping by. Again, don't forget to subscribe and like the video, and I'll catch you in the next one.